Historically, when investors engage with a financial advisor, a primary motive for talking with them in the first place is to help answer the question, how can I structure my investment portfolio in an optimal way to help maximize my returns over the long term? And I think one thing that's good to note up front is this is an extremely hard task for anybody to do consistently year in and year out. And the reason why it can be so difficult is because the best performing asset classes and investments change each and every year. What's the best performing investment type today may be completely different from what the best one is 5 years from now or 10 years from now. And I think what compounds this difficulty is the recognition that there are so many different investment types out there. Some of the categories that can be good for people to look at up front is simply, what am I investing in? Am I investing in stocks, which may be better performers over the long term, but more volatile? Am I investing in bonds, which are more conservative, but provide me a pretty good yield every year? Am I investing in private investments, like private equity or real estate? Or am I just holding a lot of my money in cash? By looking at the historical returns on each of those categories and the associated levels of volatility, you can start to give yourself a good benchmark of building expectations of how your portfolio will perform over the long term. Some other categories that are important to note is some companies are based in the US, others are based overseas, and getting a sense of different periods where the US outperformed international stocks or vice versa can give you a sense of how things change over time. I think what's more important than chasing fashionable investments or trying to determine what the best performing investment is going to be each and every year, it's good to ask yourself some of these following questions to give yourself a sense of how you want to build your portfolio. I think it all starts with cost, knowing how much is it going to cost me to hold this investment type each and every year? Is it going to cost me to have to buy or sell out of this type of investment? Is this investment liquid or is my money going to be tied up for a period of time? Taking a look at the levels of volatility, how volatile is this investment? Even if the returns are great over the long term, how comfortable is the ride in order to get to where you want to be with those returns? I think it's important to look at who's in charge of managing the investments that I'm in and what's their track record over the long term. And so I think that's a good starting place when it comes to this asset allocation analysis. Number one, getting a sense of the different types of investments you could put your money into. Start taking a look at history and seeing how they've performed over the long term, what the expenses have been, who's managing those investments. And you can start asking really good questions around, what does it cost? Who's managing it? How has it performed? How volatile has it been? And by doing you can mitigate potential mistakes or putting in place an allocation where you're going to be less comfortable than you really are.